Putrajaya is targeting at least 4 billion in additional revenue from Cukai Makmur for the assessment year 2022, says Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz. In a written parliamentary reply dated August 1st, Zafrul explains that the specific revenue collection from the tax can only be determined in the income tax return form for the assessment year 2022 within 7 months from the end of the company's accounting year. To clarify, the prosperity tax is a one-off tax measure introduced by Putrajaya in Budget 2022, whereby chargeable income above 100 million will be taxed at 33% instead of the previous 24%. Regarding the implementation of new taxes, Zafrul notes that the government has not planned to implement any new taxes such as GST, windfall tax or inheritance tax in the near future. As such, he says the initiative is necessary to ensure that the tax revenue collection can be increased to meet the needs of activities or special rehabilitation programs to help target groups affected by COVID-19 and higher cost of living due to the uncertainty of the global economy. Meanwhile, Zafrul also came out to say that any purchase and sale of EPF investment assets are subject to investment portfolio rebalancing activities. The liquidation of assets carried out by the Employees Provident Fund remains based on the ordinary course of business of the EPF itself, without any specific liquidation to cover the withdrawals under the Ailastari, Aisina and Aichitra schemes, as well as the special one-off withdrawal of 10,000 ringgit. Zafrul was replying to a question by Sampurna MP Datuk Sri Muhammad Shafi Abdul, who had asked whether EPF's assets have been liquidated to cover the special withdrawals. The Finance Minister explained that the EPF also receives healthy monthly net contributions as well as consistent cash flows through the maturity of investment instruments and the generation of investment income. The Dewan Rakyat has approved the proposal for the Control of Tobacco Products and Smoking Bill 2022 to be referred to the Parliament's Special Select Committee, where Health Minister Khairy Jamaluddin will be the chairman. Lawmakers unanimously approved to refer the bill, currently at the second reading stage, after it was debated by 12 MPs over the past couple of days. Khairy, who wrapped the session, resubmitted the motion of the bill, announcing that 13 MPs from the government and opposition bloc will be members of the PSSC, which will be making recommendations towards fine-tuning the bill. Khairy explained that the PSSC may invite any party such as MPs, legal and constitutional experts, NGOs and civil society, as well as other individuals to attend PSSC meetings from time to time. The Health Minister also said that the PSSC will have to prepare a statement containing proposed improvements to the bill within 1 month. One of the members of the PSSC, Bandar Kuching MP Dr. Kelvin Yee, who is also the president of the PSC of Health, Science and Innovation, has called for safeguards to be implemented to prevent enforcement abuse. In particular, Yee was concerned about the provisions in the bill that grants enforcement officers the power to enter any premises, seize baggage, stop, search and seize conveyance, and to conduct body searches as well. Yee says that a person addicted to nicotine, whether in the generational endgame generation or not, has the right to be treated equally under the law. The MP stressed that the request for a review is not a bid to further delay the bill, pointing out that the implementation of the GEG has already been delayed for 2 years and therefore should not be affected. LPI Capital second quarter net profit dropped 32% year-on-year to 56.77 million as the group incurred higher claims by policyholders and as top line also declined. Revenue fell to 397 million from 420 million due to lower gross earned premiums and investment income. Despite the weaker numbers, LPI declared its first interim dividend of 25 cents per share. It was a similar story for the first half, where earnings declined by 29% year-on-year from 166.2 million to 118.3 million as revenue slipped by 8% to 794.8 million ringgit. Chairman and founder Tan Sri Dr. Teh Hong Piao said that the performance of the Malaysian general insurance industry has been affected by the volatility of return on investment instruments and the normalization of claims experienced as the country transitions to endemicity. Looking ahead, LPI is mindful of factors including a possible recession in developed economies, which would lead to lower external demand. LPI also points out that the second phase of liberalisation of the insurance industry in Malaysia that is expected to commence in the second half will put further pressure on premium pricing and underwriting. However, LPI says with its emphasis on prudency in insurance underwriting and continued product innovation, it is confident that it will remain competitive and resilient to sustain its profitability in the liberalised environment. Sapporo Energy has been awarded a 2-year extension of a charter and service contract by Petrobras in Brazil worth 580 million ringgit. In a statement, Sapporo Energy said the contract was awarded to Sapporo Navegação Maritima, a wholly owned subsidiary of Cibra Sapporo Participacos, a joint venture company between Sapporo Offshore and Cibra Servicos de Petróleo. The 2-year contract duration for Sapporo Esmeralda commences immediately on August 2nd, 2022. Sapporo Energy explained that the contract scope of work includes the provision of services and charter of installation and recovery of flexible pipes in the Brazilian waters in a maximum depth of 2,500 meters. According to the oil and gas player, the award strengthens Sapporo Energy's presence in Brazil, signifying its ability to create strong partnerships and deliver value to clients. Its engineering and construction segment operates 6 pipe-laying support vessels in Brazil with the utilization rate of about 95%. Industronics has secured $1 billion in funding from China's state-owned investment holding company, State Development and Investment Corp, for collaboration on asset management and capital market services. In a statement, Industronics said it entered into a deal with SDIC in line with its plans to acquire 10% of Hong Kong-based renowned stockbroking, asset management and credit firm Bluemont Financial. Industronics said it will set up an investment bank in Labuan and work with the regulators on compliance-related issues. The company said part of its future plans include an acquisition or collaboration with a local stockbroking firm in Malaysia to expand its offerings in the capital market services. Executive Director Datuk Chu Boon Tiong says given SDIC's strong track record in investment, restructuring and capital operation, he is confident that this will fast-track the company to expanding into offering capital market services. Chu says that Industronics' role is to deal with the local authorities and regulatory bodies for the setup of the investment bank backed by SDIC's funding. He adds that Industronics' expertise in cloud solutions and digital offerings, the proposed acquisition of Bluemont and collaboration with SDIC will put it in the driver's seat to push for digital brokerage services in the region, capturing the potential from the potential delisting of China companies on the US stock exchange.